Let's start maybe with just overall the aspect of alternatives and private markets. To what degree do you find that interesting at this point? Why your interest in that sphere?
Mm-hmm. Yeah, I mean, I would say as an entrepreneur, you normally, as long as you're not doing what everybody else does, and then you're normally not a successful entrepreneur, you always have a certain alternative route, right? I mean, either you're earlier than others or you do something better or different. So that's why for every entrepreneur, the whole alternative asset space is something where they maybe also in their daily life are literally surrounded all the time, right? And that's why, I mean, you can always have a traditional portfolio and buy into blue chip stocks or whatever, but I think to a certain extent you have a very close connection to the whole alternative space. And that's why, for me, as an entrepreneur who always wants to build something new from scratch instead of just taking the money and then give it to somebody else to make it grow, right? I think there are just many very interesting opportunities in private markets, which are maybe also from an entrepreneur perspective far more appealing than traditional asset classes.
The private markets are also growing more quickly than traditional markets. It's time-wise, I mean, we've discussed this a few times. It's also from our perspective, it's really interesting at this point, particularly to be in private markets and alternatives, because what used to work might not work in the near future, in the next 10 years, because, you know, we talk about new era, and actually in that fireside conversation with Sune Sorensen, I think did you watch that? Or Sune made a good point saying that looking forwards, investors will have to do extraordinary things to get extraordinary outcome, and ordinary things won't work anymore. So beta, you know, investing basically with the markets is going to get much more difficult.
Yeah,
so from that standpoint,
yeah.
I think it's definitely the time for alternatives and private markets. There's, in general, what people say about alternatives is that, you know, there's access to a wider range of investments that might not be in the public markets. There's less regulation to some degree, which also in some cases might be more risk, potential for higher returns. But overall, one of the things that is difficult for investors to get into those markets is, unless you're an entrepreneur and you're doing it, you have issues like transparency. You know, actually knowing your way around digital assets is one example of that. Liquidity is often an issue. You're in it longer. That can have pros and cons, because you're also maybe not affected as much as in the public markets, the swings of the mood. But in your take, if you look at private markets versus traditional markets, and the areas that you're interested in, how big is your exposure? How much would you actually put into private markets rather than traditional markets?
Yeah, it's always a little bit the question how you structured in general, right? And what you would really put into one of these two buckets. But I mean, I think most entrepreneurs are by far heavily overexposed, maybe roughly to 80-90%, just because, I mean, I think if you made your money by building companies,
because part of your value
exactly, and you also are passionate. I mean, for me, it would be quite a dull experience to literally have 80% of assets in some ETFs, even if they maybe outperform the market slightly, because then there's no passion behind, right? I mean, you should definitely have some part of your wealth without having bad sleep all the time. But on the other side, I think this focus on something which has an impact, which has a maybe double dividend, because you generate more than just financial return and you have passion involved, is maybe one of the reasons why, again, alternative assets and private markets are more appealing to certain investors.
To a growing number of investors.
Exactly,
too.
yeah.